Hey guys, and welcome to the Strategy Lab video. My name is Alexander Nikitin, and in today's video I will show you a simple way to find key support and resistance levels, and I will also show you one trading opportunity, high probability trading opportunity that is setting up on EURJPY for the next week. Okay, let us start. To analyze the chart, you need to know how to read a price chart, and to read the price chart you need to know an alphabet, and of course the alphabet for price chart reading is a Dow theory. Dow theory consists of a number of principles, and we will use these principles today. One of these principles say that a daily close price is the most important price of the day, and intraday highs and lows should be ignored. That's why you simply switch to line chart, because it consists only of close price. Another principle, it says that there are three kinds of trends: primary trends, secondary trends, and minor trends. And we should understand that primary trends, they consist of swings, and these swings are actually secondary trends, and secondary trends themselves, they also consist of swings, and these swings of secondary trend, they are minor trends, and we can divide it to infinity, but this three is enough for analysis. Majority of Dow followers, they agree that in duration a primary trend is about a year, secondary trend is about 3 months and more, and minor trend is 6 days and more. So 6 days and more, 3 months and more, a year and more. That's why if you analyze daily time frame, you need to analyze at least 1 year of data. Today is the 8th of June. You just grab a vertical line, you place it, and it is 7th of June 2018. My eye is perfect. If you will analyze different time frame as a high time frame, let's say 4 hour, 1 hour, or similar lower time frame as your higher time frame analysis, then you simply use a 260 bar period. 260 bar period is exactly 1 year on daily time frame. Okay, so what's next? Once we know the time that we need to analyze, so let us start. And this analysis is very simple. It is similar to something that is explained in Glenn Neely's book. His book is called Mastering Elliott Wave, and he's giving a concept of mono wave, and I dislike the word mono wave. I like the word minor swing, and if we have a minor swing, which is actually a straight movement on line chart, straight movement without turning to the downside. This one is not turning to the downside and continues to the upside. That's why it is the same movement to the upside. So a minor swing stops when we have a downside movement. So a number of these minor swings, they can form zigzags, and zigzags are actually what is understood as a trend. So zigzag to the upside is an uptrend, and zigzag to the downside is a downtrend. Why they are understood as uptrends or downtrends? Because of trending highs and trending lows. So this high is higher than this one, this low is lower than this one. That's why we have an uptrend. And trending lows and trending highs. If we have a lower high and lower low, then we have a downtrend. So zigzag formation is the minimal formation that gives us understanding that this swing high lower than this one, and this swing low is lower than this one. So zigzagging formation is the minimal requirement for a trend. Okay, so let us look at minor waves, and let's find zigzags, and we will mark these zigzags with trend lines. So we have a zigzag to the downside here. So let me disable ray and let me choose the color of blue. Okay, let it be magenta. We have a minor downtrend. Why I stopped here, why I'm not extending here? Because then we have a zigzag to the upside. You see, it is a minor uptrend. Then we don't have any zigzag, that's why we simply skip this. Then we have a zigzag to the upside, and then we have a zigzag to the downside like this. Then we don't have a zigzag, but we violate our minor downtrend, yes, and then we have zigzag to the downside. So by itself this movement is minor swing. As a whole, this zigzag is minor trend. So keep in mind the terminology. Then we draw another minor swing, secondary swing, but minor trend. Minor trend to the downside, minor trend to the upside, and we continue this all the way to present day. So we have a minor trend to the downside, then we don't have violation. This means that previous minor trend didn't stop. If previous minor trend didn't stop and we then continue installing a downside zigzag, this means that our previous minor downtrend continues. This is very simple. You should pay attention to lower lows or lower highs. So you have high, you have lower high and lower high. So if you have lower highs, this means that it didn't stop. But the first time you have a higher high, so this high is higher than this means that your previous downtrend stopped and now you have an uptrend. Very simple. We have downtrend here, we have uptrend here. Of course they are all minor, uptrend or downtrends, but you should also remember about fractal nature of markets, and all these downtrends, they are swings. They are swings, secondary swings, or they are swings of a secondary trend. They are parts of secondary trend. So you see, it violates that. That's why it stopped. An uptrend stopped. A new uptrend begins. Now a downtrend is this big zigzag, boom, boom, boom. Very, very simple. Now this zigzag, no lower highs. Here price is not a zigzagging price, it's still high, it is moving higher. Well, if you practice, you find them very easy. An easy way to do it. Now you have secondary swings on your charts, and based on these swings you can draw secondary trends, uniting swing highs and swing lows. You should keep in mind that if you have a swing high, swing low, swing low, and if you have this pattern lower, low and lower high, then you have a downtrend, and if you have the inverse, then you have an uptrend. Very, very simple. Now let's unite them all and let our primary swing be gold. Gold is nice, yes. So we simply unite based on these swings, based on this what is the color? Magenta swings. Let us do it this way so you you are not distracted by this price. Okay, so we simply unite these swings. Secondary swings are united in secondary trends, and these secondary trends are nothing but what? They are nothing but primary swings. Okay, we started downside movement. then we have a high, which is a lower high, then we have lower high, and all the way down, because we never had a higher high. That's why all this combination is one zigzag. And the same stuff here. We have low, we have higher low, and all the way to the upside, because we never had a lower low. We only had higher lows. Okay, and here's the zigzag that goes 1, 2, 3, 4, 5 legs to the downside. That's it. Now let me make price visible again, so the total picture looks this way. Now, as you might have understood, you might have guessed already that your key reversal points are actually the reversal points of primary swings. So you should ignore all those other swings. You only pay attention to primary swings, to these gold lines. So highs and lows marked by these gold lines are your key reversal levels. And let these levels be what? Let them be lime, maybe. Lime. So here are your key support and resistance levels. As you see, this methodology of identifying support and resistance is 100% objective. If you take 100% traders and you teach them this way of identifying the market, and then you will give them the same chart, and they will analyze this, they will have similar picture. Not the similar picture, but they will have identical picture. Okay, after you have drawn this stuff, what else you need to do? You need, now finally you can find a primary trend here. So what is the primary trend here? It is this big gold zigzag to the downside. It says that we have a primary downtrend. You see? Okay, we have a primary downtrend, and if we have a primary downtrend, then we can draw a primary trend line, downtrend trend line. We simply connect the highs. So let's go and let's extend this and let the color be as all our levels lime green as well. It was exceeded slightly here, and then price came back. This was a false breakout or something. Okay, now let us switch to candles, and you can see that many times these levels, they act as reversal points, and every time price breaks these levels, every time, yes, it requires big candle, it requires powerful movement to break the level to the downside, to the upside. Here, to break it to the downside, we require powerful movement to the downside. We reverse here, or we're gapping when breaking this level. It is also a powerful sign, a sign of power. So breaking this. In many cases, it requires powerful candles, powerful movements to break these levels, or it reverses. Okay, now what we should do, we know that we have a primary downtrend. We know that we price came back to test a key. It should now turn into a resistance. It was previously support. Support now should turn into resistance level, key resistance level, and somewhere from this level we should expect a downside continuation of a downtrend. So when we talk about continuation of a downtrend, this means that we should install a lower low, which is lower than this. And to be conservative, we should at least test this low. At least test this low. At minimum, test this low. So the potential of price movement is wonderful potential of price movement. Now let us examine trading opportunities, the setups themselves, and how we can attack the this situation. I will do two of them. I will analyze the market from harmonic patterns perspective, and then I will analyze the market from my own perspective. Okay, first of all, let's start from harmonic perspective, and to do so we need to switch to harmonic patterns, and let's enable bat pattern, butterfly pattern, and disable alternative shrug. Okay, as you might have noticed, we have this zigzag information to the upside, and when we have those zigzag information to the upside, they are potential ABCD patterns, and if we add the X to A leg, these patterns turn into XABCD patterns, or in majority of cases they are called harmonic patterns, but not all the patterns are the same, and that's why they are not all harmonic. If you are a harmonic trader, you should understand what I'm talking about. If you are not harmonic trader, then just use this information. Okay, let me draw. The first pattern that is here is a harmonic bat pattern, and it is drawn this way. I will simply unite these levels here and here. The exact 50% retracement of the B point. I think harmonic traders are ecstatic right now. Exact B point is something that happens very, very rare, and we have a pretty tight potential reversal zone, and as you can see, this potential reversal zone is pointing to where? To our primary trend line. It looks pretty good. It looks pretty good. Primary trend line looks pretty good, but later, just seconds later, I will explain why I dislike this pattern. Okay, then let me show you a second pattern, second harmonic pattern that is right now at this chart is a butterfly formation. So let me draw this butterfly pattern, a harmonic butterfly pattern, and it looks this way. So you see it almost coincides with a bat pattern, so they all point at the same level, and these things, these potential reversal zones, they are very close to each other, so you should keep these zones in mind. They are pointing to this trend line, very important confluence. Okay, let me now delete these patterns. I will leave the potential reversal zones. So to delete these patterns, I will simply switch it to automatic algorithms and then back. And you see these patterns are deleted and only reversal zones are left. First of all, what I dislike about these things. To go here to the upside, let me take my drawing tool. To go here to the upside, we first need to break this key resistance level. So we need to break this key resistance level. And if you will look at the history of the chart, when we break this key resistance level, we typically have this big candle here, big candle, and maybe somewhere here, a test big candle, big candles to break this level, because it is a powerful level all the way back into history. That's why you will most likely have this big candle here, and then you will have an additional reaction. So in a matter of 2 days, if it breaks this level, yes, you will have a test of this. And then after that, what is your target then? After breaking the key resistance level, it now should turn into support. That's why price may retrace. And if you will use standard harmonic targets, yes, of I don't have 382 here. Let me enable a Fibonacci level of 382, 0.382. 382. You may never have price reaching your target level, or if you have it from here, you may never have price hitting your 382 target and you don't have your winner. And of course, I doubt that it goes deeper to your secondary target. So the at most you have one target at maximum if you use bat pattern or a butterfly pattern. This is the maximal that you can get. And because you have this two levels, most likely behavior is this price ranging between these two levels. And if you guys are familiar to classic chart patterns, of course, this upside trend followed by these ranges, it is in majority of cases it is broken to the upside as well. So that's why I dislike the scenario when price goes above a key resistance level. That's why I dislike this scenario. Okay, but what I do like is this scenario when price is below the resistance level. Right now it is below the resistance level. So let us see what is the potential here. Do we have any key resistance levels here? No. We have only empty space. We don't have any obstacles here all the way down. Here we have this obstacle to go to the downside, and then we go this obstacle when we go to the downside, and this obstacle when we go to the upside. Yes, so we're in a range, but here we don't have any obstacles, and this is I suppose it is the least resistance way. If you understand what I if you understand what I say, it requires less power to reverse at this level than at this level, to my mind personally. Okay, and of course I will not use any bat patterns or butterfly patterns or other, to my mind, useless stuff. I will use my own pattern that I call a unified Gartley, and it looks this way, and I will draw it from this to this. Why I have chosen the X point of this? Because I like my X point to belong to key level. My X point should not belong to empty space. I like my X point to belong to key level, and that's why my pattern looks this way. It was already completed and the zone slightly exceeded. Another evidence to support my idea is the one-to-one measured movement. If we take this channel tool to measure moves, you see you have the same size, you have the same slope, and in a matter of 1 or 2 days it is pointing to the same area. So let's say starting from completion of this pattern and ending the one-to-one measured movement is the reversal zone, and somewhere here it includes the key resistance level. Somewhere here we should start the reversal. So if reversal starts and it goes here, we can place our stop loss just at this level. Until it started, we can place our stop loss above the X point, above the key resistance level. So I'm using 5% above the X point, and it is in absolute values 10 pips above the X point right now in this situation. So here's the trading opportunity that I wanted to share with you today. If you guys find this video useful, don't forget to hit that like button, subscribe to my next episodes, and if you are interested in MPS pattern recognition software, hit the link in the description. And until then, good luck and good trading. I hope to see you soon.